SHEIN is reportedly seeking a 90 billion with a B IPO valuation in the US. According to TechCrunch, the $90 billion price tag is up from the $64 billion valuation it was given in a funding round earlier this year. Chris, $90 billion. What do you think? Is SHEIN overhyped? Like, is this real? Is this really happening?
Wow. And by the way, full disclosure, so no one take my advice on this in any way, shape, or form, because I have no idea what I'm talking about. And I don't even really want to get into the valuation of whether it's overhyped or not. But, you know, I think it's a good question. And we're going to have Jordan Burke on in a second to explore both SHEIN and Temu with us, because there's a lot of interesting angles that I think our audience needs to know, Ann. But on the surface, I mean, I would say maybe, I have no idea. But I think the more important point of this conversation is really, let's look at SHEIN's business model against some US comps. I thought this was a fun experiment I did yesterday, and we started having fun with this yesterday. So some points of reference, because maybe some people are, but the average person may not be looking at the market caps of US retail companies all that often. I have no idea. Maybe some of you are.
Casually over coffee on a Tuesday morning. Yes.
Right. Yeah. Of course, right. Exactly. Right. So let's start from the biggest, like Walmart, or not the biggest, because, you know, Amazon's bigger than this, but Walmart, traditional omnichannel retailers, $45 billion. Okay. Big one. Mm-hmm. Then there's a big fall off after that, really. And I just
a little bit of a gap.
Yeah. I picked some random companies that are in SHEIN space. So you've got Lululemon, which surprisingly, $52 billion, Ann.
Yeah.
That blew me away, because you have Target then at $51 billion. So Lululemon is valued more than Target right now, which is astounding to me. Gap at $5 billion. Macy's only at $3 billion, and Kohl's at just over $2 billion. So, and this is all as of yesterday, November 7th. So when I look at it that way, when the US comps are, you know, even though they're smaller in total, like I think when you look at the size of the pie that SHEIN's going after, I think you have to take this valuation at least seriously, because you have to remember that SHEIN is a worldwide business. These companies I just mentioned are not.
Right.
Their business model goes directly from factory, and they also have some of the best front end hooks of their e-commerce experience going right now. So I'm kind of actually buying into it when you look at how much business, because there's a lot of other retailers I could have named with market caps, you know, in the $1 billion range, and SHEIN potentially could take a slice from all of those because they're a cheaper option.
Yeah, totally. I think it's really important, the points that you call out, and just for all of our audience, for the US retailers to be paying attention to, not only because of what their market cap looks like right now, but more importantly, I think how they are changing the expectation of the next generation of shopper. Low factory to consumer direct prices, gamification, group buying, like all of these things. To me, this is like what Amazon did to the retail audience when they came on the scene, you know, decades ago, how they changed our expectations of things like next day delivery, how they changed their expectation of assortment, price point, all those things. SHEIN is doing this for that next generation of audience. And I think if for no other reason, you're paying attention to what the expectations are of your future consumers.